Hey everybody, welcome to the guided assignment for chapter 24. I think the good news is you're going to find this pretty easy, so that's exciting. Easy is good. So let's just jump into it. So we have the Crunchy Granola Company is a diversified food company that specializes in all natural foods. The company has three operating divisions, and they're organized as investment centers. Remember, investment centers have responsibilities not only for revenue and expenses, but also for fixed assets. Um, and so we're usually going to look at things like return on investment when it comes to um, our, our investment centers. So condensed data taken from the three divisions is right here. And then the management of the Crunchy Granola Company is evaluating each division as a basis for planning a future expansion of operations. So prepare condensed divisional income statements, and then they want us to calculate ROI. So I think we can do that. So honestly, sales, we're really just bringing this information down. I could even just copy and paste it. In fact, I think I'll do that. That'll make our lives easier. We know our gross profit is just our sales minus our cost of goods sold. And then our operating expenses are given to us here. I think I'm going to use an Excel spreadsheet because I think that will make our life easier. So that's all the information given to me up here. I'll have to calculate the gross profit and the operating income. I'm going to actually do that in Excel, and I'm going to actually pause this video while I put this exact same information into my Excel spreadsheet so you don't have to watch me do it. I just think using Excel a lot of times, even though it's kind of a hassle to type the info in, it ultimately becomes worth it in the amount of time saved with the calculations. All right, so I paused that for about 2 minutes so I could put that in an Excel spreadsheet. So I'm just going to bring it over here. And so there it is. That's just kind of exactly this data. I just copied and pasted each one. Unfortunately, it wasn't easy to copy and paste it all, but there it is. So now to find my gross profit, I'm actually just going to insert a row there. And that's just going to equal my sales minus my cost of goods sold. Somehow that's not registering as a number. Sometimes when you copy and paste it out of this, it didn't see it as a number, so I had to hand type that in. But even then, you see it took me just a couple seconds. So there's my gross profit. So I can just throw that in right here, 8. $425 and $955. And then my gross profit minus my operating expenses is my operating income. Gross profit minus operating expense. Fill that is my operating income, which is 1,480,000 and 682,500. We can check our work. We're all good right there. So in our first analysis here, we would say, well, the cereal division's doing the best because they're making $1 million in operating income, where the other two divisions are not doing as well. So now they want us to do figure out our profit margin, our investment turnover, and our ROI. So all right, so our profit margin is just our operating income divided by our sales. So we're going to say operating income divided by sales. So once we do that once, we can use the little fill tool. It will calculate all of those for us. We'll tell Excel we want to see that as a percentage. I believe it says round to 1 decimal place. So there it is. Actually, whoops, that give me my profit margins. Yeah, that's actually going to be a little bit of a hassle because of the fill, but there we go. Our investment turnover is just our sales divided by our invested assets. So sales divided by invested assets. And our sales divided by our invested assets. And then finally, our ROI, or return on investment, is just our profit margin times our investment turnover. And again, we want that as a percentage rounded to 1 decimal. There we go. So our profit margin is 4%. For the cereal division, investment turnover is 2.5, giving us an ROI of 10%. 6% for our snack cake division, investment turnover of 2 for an ROI of 12%. And the retail bakery has a 7% profit margin at a turnover of 1.5 for an ROI of 10.5%. And then finally, it says, when faced with limited funds for expansion, management should consider an expansion of the blank division. And so we're going to look for the best return on investment. What return on investment means is how much profit are we making, or operating income in this case, relative to the amount of money we've invested in it. And so even though cereal division is making $1 million, we've had to invest $10 million to make that $1 million. Whereas the snack cake division is only making 480,000, but we only had to invest 4 million to do that. So it's getting a higher return on investment, which means if we have the money and we can't invest in all of them, then we should choose to invest in snack cake because it's going to make us a greater return on our investment. There we go. All right, so let's go on to the next problem. So here we have a budget performance report for a cost center. And this is GHT Tech. They sell electronics over the internet. They're organized as a cost center, which, remember, cost centers aren't responsible for revenues or for fixed assets, just for controlling their own costs or expenses. So here, this gives us a budget. And then it gives us the actuals, the actual costs they incurred. But it wants us to do a performance report where it compares actual to budget. And then we can look at what's over budget and what's under budget and use that for analysis. So again, I think it's going to make the most sense to type this all into Excel. So I'm going to pause this for a second while I do that. And then we'll be good. All right, so here's all the information from the actual, which was given to me here, and the budget, which is given to me right here. If I want, I can make these dollars and get rid of my pennies. Whoops. All right, so it wants me to prepare a budget performance report, which is actually just going to have another column for over budget, another column for under budget. There's a couple ways to go about doing this. To me, the easiest thing is just in this, for the over budget, just take the actual minus the budget, and that'll tell us items that are over budget. In fact, if I fill this thing all the way down, you'll see some of them are negative and some of them are positive. And so the ones that are positive are going to be my ones that are over budget, and I'm just going to delete the ones that are negative. And then we can do the same thing here, where we take the budget minus the actual, and anything that's positive is going to be under budget, and anything that's negative is going to be over budget. So I think that's one way to do this. And so that's how I'm going to do it. Then I'll get my totals. There we go. There's all my answers. So now I just have to punch all this information in, which is kind of a pain, but thus is the life of an accountant. Let's see if this will let me just copy and paste. This may or may not be faster than typing it in. Probably depends on how fast you are with a 10 key. Pretty fast. I'm just using Control C and Control V. I'll try typing this one in and see if it's any faster. The other downside is my 10 keys on the right-hand side, which is the same side as my mouse. So I have to keep moving my hand each time to click the new box with my mouse. And as you hand type it, the chance of making an error is a little bit greater just because you're typing it in. So not sure which is better. That's up to you, I guess. Still having it in Excel allowed me to not have to use a calculator for each of these calculations. And so I think it's still faster. So now our over budget items are these ones right here that we've just identified. Our customer service salaries, 55,510. And our marketing salaries, 56,860. And then those add up to under budget is these other items that we've identified right here. I have insurance and property taxes. And those add up to 56. All right, let's see if I got it all entered without any errors. I did. So we can see we're over budget by 112,370. And we're under budget by 56,062. It doesn't ask us for it in the problem, but in real life, we could probably say overall, we're over budget 56,308. So then the next question is, well, for which costs might the director be expected to request supplemental reports? And by supplemental reports, we really just mean reports that give more detail. And so the answer would be, well, usually it's those accounts that are over budget. And in this case, these two are both like way over budget, right? We spent 55,000 more on customer service salaries than what we had budgeted for, and almost $57,000 more on marketing salaries. And that doesn't necessarily mean that we're going to choose customer service salaries and marketing salaries as they're significantly over budget. It doesn't necessarily mean we have to fire people. It might mean we just have to adjust our budget, right? Or, because if those if we really need to have customer service at that level, then we should keep it at that level and figure out other ways to adjust our costs. But if we don't, if we find out it's just poor scheduling on our part and we have people sitting there doing nothing, we might be, cutting back hours or things like that, or making some adjustments. All right, so there's the whole guided assignment. I hope it was relatively easy for you, and I hope you have a terrific day.